Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Silver sitting at $15.59. Is it going to reach that $16 mark, or is it going to push back towards $14? Right now we see gold at $1,740 in the red by $14.67. Silver $15.60, down 33 cents. Platinum $784, down $2.75, and palladium $2,235, down $52 on the day. So I have an article I want to share with you guys talking about where the price is going in the next coming week. But before we start, I want to talk about the gold to silver ratio. It still is over 110 to 1. Now, what does that mean? That still means that gold is outperforming silver to somewhat of an extent, but we do see the ratio dropping a little bit because the ratio was as high as 125 to 1, so it has dropped a little bit, but it's still, dropping 15 points in the grand scheme of things is nothing compared to what the ratio should be. So it still is very interesting to see the ratio this high and staying this high for this long. So before I go into this article from capital.com, I am curious to see or to hear from you guys and gals where you think silver should be by the end of the week, or the next coming week, because this article is going to give some flavor, give some context on why silver may be headed in this direction, and I would love to hear what you have to say and your insight. So anyways, silver in many ways is the most mysterious of precious metals, has long fascinated investors and traders of a certain frame of mind. I like the way they put that. It is mysterious. There's a lot of mystery, there's a lot of, context and backstory and history that silver has that brings it to a different category of potential. So less glamorous than its fellow bullion asset gold, the gray metal is also a trickier proposition in terms of making a profit for reasons we shall explore. So silver is more volatile than gold. It fluctuates extremely high and extremely low compared to gold. So you can see silver hits higher highs and lower lows. Recently the price has headed higher, bringing down the gold to silver ratio like I was mentioning earlier. The all-important indicator of how many ounces of silver would be needed to buy 1 ounce of gold. The direct economic link. But this is merely a short-term fluctuation, or could it be sustained? Before trying to answer that, a look at the fundamentals of silver trading. As mentioned, they are not straightforward. Gold is essentially a safe haven asset, attractive when paper assets such as shares or major currencies are out of favor or for whatever reason. It has only a limited value, other than an investment vehicle for the manufacture of jewelry, and there has always been some overlap between the two. Just 10 to 15% of gold supply is used for industrial purposes such as dentistry or electronics. So silver, they say that gold is more of an asset and silver is more of a commodity, but it's actually the opposite in my opinion. Gold is more of a commodity. Silver is more of an asset. It even says just 10 to 15% of gold is used for industrial purposes. More gold is used for, jewelry, more for coinage. Silver is used more for industrial, like electronics. These factors simplify gold as a trading proposition, as does its relative scarcity. None of these factors apply for silver. About half of all silver mined is used in the industry, traditionally and most famously in film, hence the silver screen nickname for the movies. That immediately gives silver price a direct link to the world economic conditions. Nor does the scarcity seen in gold supply apply in the same way to silver, given that it's mainly found in the ores of base metals such as copper and lead, meaning byproduct. So they're saying that, gold and silver have a different market essentially, and that's why the prices are different. Silver being more used in the industry affects the economy. So if the economy is doing poorly, that could affect silver poorly because silver is so tightly knitted to how the economy is performing since it's used so much in the economy as this industrial metal. So that means that it can be pulled out of the ground regardless of demand for silver, creating a built-in tendency to glut the market. Finally, silver has a reputation for attracting a wilder type of speculative trader, a hangover from the era between 1933 and 1974, when American citizens were forbidden from trading gold and thus this treated silver as the next best thing. Reversal of fortunes. Whereas all this may put off very many traders, for a certain type of market player, it is complications of silver dealing that compromise the attraction, rather than as a particular type of actor or director relishes the chance to get stuck into Shakespeare's problem plays, such as a measure for measure. So where are we now on the silver price, and where might it go next? That's really what we came here for, right? On the morning of April 9th, silver was changing hands at $15.22 an ounce, and right now we see it around $15.60, so it is up a little bit. To get a feeling for the relative value of gold, its price was $1,649 an ounce. During the past month, the two types of bullion have been moving in opposite directions. On March 9th, silver traded at $14.60 when gold was changing hands at $1,676. The whole story? Far from it. This is the second reversal of fortune this year alone. On January 9th, gold stood well below today's level at $1,547, while the average price in January was $18.07, considerably higher than now. In figuring where prices go next, experienced traders look at the gold to silver ratio, arrived at dividing the gold price by silver price. Currently, it would take 108 ounces of silver, which right now it's currently 110 ounces, to buy 1 ounce of gold. On March 19th, it took more than 124 ounces of silver to buy 1 ounce of gold. A recent peak. What seems to have happened is the traders took this as a signal that gold was overpriced relative to silver and switched from the yellow to gray metal, hence the rise in silver price and the decline in gold-silver ratio. Paying over the odds, this is to be expected, but the price has taken its time adjusting. Conventional wisdom has it that any ratio above 80 ounces of silver should switch a trigger out of gold, which was last below 80 ounces in September last year. Of course, these are not normal times, and gold demand has been greatly lifted by the huge uncertainty generated by the coronavirus and the accompanying enormous stimulus programs put in place by governments in the developed world. Programs that can have effect of devaluing paper currencies. To see the scale in the rush into gold, today's price was nearly $350 higher than $1,301, which it traded on April 9th. It could well be that, in the current climate, investors and traders are prepared to pay over the odds for gold and are less interested than would normally be the case for judging whether silver is underpriced. But the fact remains that gold-silver ratio is signaling that is still the case despite the recent adjustments, and that sooner or later, despite previously mentioned complications of silver trading, the partial correction for the past month is probably some way to go. So here's the silver price prediction for the next week. In the week ahead, silver is likely to present buying opportunities for as long as the ratio stays above 90. And I definitely am I'm almost positive the gold to silver ratio will stay above 90. Since it's at 110. A level last seen in late February. But remember two things about this market. One is that a complex environment is in which to trade profitably. The other is that gold-silver ratio should be scrutinized at all times, if for no other reason that all their traders would be doing so and acting accordingly. It is the key index as to price relationship between the two main bullion metals, if you like their measure for measure. And that's definitely true, right? The gold to silver ratio is definitely the best tool to see which investment is better at this current price, or during these current times. And I like how they did mention COVID-19 and how we are living in crazy times, so markets might not be acting how they usually do, right? Things are going to be a little off right now because COVID-19 has such a great impact, and they even mentioned the stimulus packages. So anyways, I'm curious where you think the price is going to be headed for the next week. I definitely think silver could reach around the $16 range, maybe mid $16 range if we get lucky, but nothing more than that. And if anything, maybe $14.90, nothing really lower than that though. But it really does depend on COVID-19. A lot of people are getting their stimulus checks, so they might encourage buying as people are getting that $1,200 that they so were promised. So it could affect that, but probably not to too much of a degree. So anyways, I'm going to wrap this video up here. If you did enjoy this video from Capital.com, make sure to smash the like button. If you thought this video was educational, informational, or just entertaining, make sure to smash the like button. Thank you so much for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.